This week, we're looking at a company that is set to explode. Their stock has been on the rise for months when the rest of the market has been in freefall. In this video, I'm going to show you why this stock has the potential to be a solid investment and what the right setup looks like for us to add it into our spread betting account for tax-free returns. That's right, guys, tax-free here in the UK. My name is Zahir Anwari. I'm the co-founder of SublimeTrading.io. We have helped hundreds of private investors over the past 10 years learn to profit from trends in the markets through our simple to learn methodology. I also write for a number of publications, including Benzinga.com, and I'm regularly invited to guest speak on how everyday people can skyrocket their stock's performance, focusing on the next 3 to 5 years. So the stock name, the Hershey Company, ticker symbol HSY. So, a brief background. The Hershey Company, which we all know as Hershey's, is an American multinational company and one of the largest chocolate manufacturers in the world. Reese's Peanut Butter Cup, M&M's, Kit Kat, even Cadbury's all have their history in the Hershey's brand. It was founded in the late 19th century by Milton S. Hershey in Philadelphia. The Hershey mission statement in its entirety is, at the Hershey Company, we make chocolate brands that people love. Hershey's mission statement, bringing sweet moments of Hershey happiness to the world every day, summarizes our company, our people, our past and future. Okay, interesting. They employ around 20,000 people across 19 plants worldwide. Unsurprisingly, their revenue is in the billions. I'm no doubt paying a big portion of that. I'm a big sucker for M&M peanuts. Now, a company of this size does not come without its controversy in terms of its ethical practices. However, with more pressure, these global brands will hopefully improve and change these practices. But in general terms, the health of the company is solid. And this is reflected in the stock performance, which is why it is our spread bet stock of the week. So let's switch over to the charts and do an analysis. So this is a typical 3-screen setup of mine. I've got the monthly in the top left, the weekly in the top right, and the daily time frame down here across the bottom. Here at Sublime Trading, we like to use the higher time frames because it gives us a very clear picture of what price action is doing. And it's also where we do a lot less work to make a lot more profit. It really has an advantage over day trading. Day trading is where you go down to the lower time frames and try and day trade your way to riches, and ultimately it really where people fail. Move your analysis onto the higher time frames, and that's ultimately where you do less work for more profit. It's a far simpler approach. Okay, so let's start with the monthly time frame. Now, first and foremost, what we want to look at when it comes to a stock of the week is its history of performance. And we can see that going back many years, it's performed very well. You can see there was a good trend to the upside. Then it went through a correction, another nice move to the upside, went through another correction, another move to the upside, a bit of a correction, and then another move to the upside. Even the decline in price around COVID-19, that got absorbed into the bull trend, and it's continued on its climb. So you can see that if I just compress the charts, it has a nice solid history of performance. So the fact that it's performed well in the past means that it's very likely to perform well in the future. That's one of the first aspects of a stock that you must look at, its history of performance. If it's got a terrible history of performance, then the chances of it performing going forward are slim. Of course, personalities can change, characteristics can change, but in general terms, this holds true. If a stock has performed well in the past, it's likely to perform well in the future. So that's instantly what gives Hershey that edge. It looks interesting because of its past performance. Next, we need to look at current price action in more detail. You've heard me say this in the past. If you're a regular to our channels, we want assets that are trading above the high of last year. So this green line going across the chart, that is the highest point of 2021. As we're in 2022, we want to see price trading above that, and it is doing that. And it's moved, if I just get my tool, price has moved around 13%, 14% since that high of last year. So it's continuing on its climb to the upside. Now, if you move across to the weekly time frame, the weekly time frame paints an interesting picture. It's above the 200 simple moving average, and it's above the 50 simple moving average. If prices are trading above these key moving averages, that means price is likely to continue pushing to the upside. If price is trading below these averages, then it's likely to continue pushing to the downside. So in a bull market, we want to see price trading above these averages, and that's exactly what price is doing. Now, currently it's going through a bit of a correction, and that's expected for a number of reasons. First of all, the market as a whole has been going through a correction. This has gone through a correction, but look how well it has held during this correction. Whereas the S&P 500 has been in free fall, this recent decline has only been at its peak 12% and then 10% around where the closing prices are. In comparison to the S&P 500, you're looking at around 25%. So this has held very, very well during this decline. Now, it's found support. Where has it found support? The $200 round number. A natural feature to price, whenever it breaks through a major level, a major round number, say for example $200 is a major level. When it breaks through that, the natural price movement is to pull back and retest that level. That's exactly what we've seen here. Move through $200, pull back to retest $200, and it's now bouncing to the upside. Now, of course, price could remain inside this area of consolidation, this sideways market, for days, weeks, months. We have no idea. In addition to that, the market could continue dropping. But based on its history and based on what price is doing, and potentially if there's a full-on recovery in the market as a whole, in yesterday's recording, I looked at the S&P 500 and I showed you a particular level, the low of last year, which is acting as a support level. The bulls are coming in at this level and pushing price up. So if the S&P 500 as a whole is recovering, then we can expect a lot of these good stocks to start pushing out and breaking out and printing new highs. And so the chances of Hershey breaking out, which is breaking out above the April high of this year, is extremely strong. And we could then see price push towards $300, which is that next round number. And on the daily time frame, which is very, very interesting, price is trading above all three moving averages. So we've got the 200 moving average, we've got the 50 simple moving average, and we've got the 20 simple moving average. Current price action is trading above all three moving averages. And also notice our trend filter has turned green. We have a beautiful trend filter that we've created. When it's green, the trend is bullish. When it's red, the trend is bearish. And when it's grey, we are in a sideways market. So if you look at the trend filter since the high of April, it's got periods of green, periods of grey, periods of red, which clearly tell us that we are in a sideways market. And we can see that based on price action itself. If we just go back in time and just compress the chart, we can see that from this point here, which is March of last year, price had performed really, really well. It's moved quite nicely to the upside. Its pullback here was a little bit deeper than we would like. Generally, we want to see price holding above the 20 and the 50 simple moving averages during a trend. But it went through a period of consolidation, and then it moved up to the trended quite nicely to the upside, created a high, and it's now going through another period of consolidation. Now, what's great about these consolidations is that they act as a base for a trend to develop. Think of consolidations, think of them as roots of a tree. The stronger the root of a tree, the stronger the tree itself. This is what we want with stocks as well. We want stocks to be forming these consolidations, these sideways markets. And there's an expression which you may be familiar with, which is the longer the consolidation, the bigger the breakout. So if this continues to trend for the foreseeable future, another month or 2 months or 3 months, that would then find a nice base, create a base for a trend to develop. So once price does break out, it's breaking out from a strong foundation, and we could then potentially see price trend to $300, $400, even $500. So, and finally, to answer the final question, when would we be potentially looking to add this into our spread betting account? That is when price breaks and closes above the current high of April. Here at Sublime Trading, we're huge fans of investing into stocks that are printing new highs. The reason for that is because there's nothing above price that can stop it. Once it's printing new highs, generally stocks go on to create new highs and go on to trend very, very well. So the fact that price, if eventually price does break out, it could move towards $300, $400, $500. $500 is the next major level that could potentially cause a reversal in price. So that is our stock of the week, our spread bet stock of the week, the Hershey company. Good history of performance, setting up for a potential breakout to the upside. Excuse me, guys. And as already mentioned, we are waiting for price to actually break out. Once it breaks out, then we will look to add this into our portfolio. So I hope you like that, guys. Don't forget to like, subscribe, hit the bell notification. Where do you go from here? Well, go down into the description, click on the link. The link will open up into this scorecard. Are you ready to skyrocket your stock performance? Take the scorecard by clicking on this button. It will take you less than 2 minutes to complete. At the end of the scorecard, you'll get a detailed report on your performance and the steps that you need to take going forward to really improve your performance, and you will get 30 days free access to the Hot Stocks Vault. This is where we share the top 10 best performing stocks of the week with you every single week. Notice, guys, the Hershey company is there in this list. We do all the hard work for you. All you need to do is start profiting, learning to profit from these stocks. See you in the next recording.